Hello, everybody. So first of all, shout out to the prior panelists. Thank you so much for switching with us so that we could work on the schedule. It's delightful to be here. I'm Paul Brody, Global Head of Blockchain at EY, and also the Chairman of the Enterprise Ethereum Alliance. And I have with me...
Good to see you here. I'm Chris. I'm the co-founder and CEO of Plume. And maybe real quick, Plume, we built a blockchain and a network and an ecosystem focused on RWAs. So we are the largest ecosystem by holders, by dollars, by count, by usage for RWAs in the world. And recently had a announcement with Apollo for a large deployment there. But anyway, we'll get into it. Looking forward to talking to you guys today.
Fantastic. So one of the foundational kind of hypotheses that we have at EY in terms of how the market for stablecoins is to develop is that there are fundamentally three major use cases for stablecoins. Number one, business-to-business payments. Number two, business-to-consumer payments. And number three, investing in stuff. And if you've listened to all the panels so far this morning, we've really heard almost exclusively about payments. But actually buying assets, owning assets, making investment choices is going to be one of the foundational use cases for stablecoins. And Plume, the real-world asset platform, has been growing really explosively. Chris mentioned this. They are number one in this space right now. It's very nascent, right? I tend to think that ultimately there are interestingly, there are a total of $800 trillion in investable assets in the world today, which is kind of a mind-boggling number. There's, like 100 trillion in deposits, 100 trillion in stocks, 100 trillion in bonds, like 300 trillion in real estate. There's a huge amount of assets there. Ultimately, almost all of it is a candidate for tokenization because it makes all of this stuff instantly, globally, smart contract transactable. What I want Chris to talk about a little bit to start with is just, Chris, tell us, what is exactly that people are investing in? What are the assets they're buying today? Where do you think they will change their path in the future? What assets are they going to buy next?
Yep, totally. I think it's a good question. It's one that we talk about a lot here. And the question is always what assets coming next and why and all those things, right? Now, I think the way to actually think about and understand what is coming next is first looking at who we're talking about, right? Who's on chain? What are they doing? What do they want? And what that pool of money usually finds its way into, right? And so if you look today on chain, right? There's about 400,000 stable RW holders in the world right now, right? We have over half of them on Plume right now, and the question really is what is the composition of those folks? All of those folks today are broadly crypto-native people, right? In emerging countries, right? So you might be in Southeast Asia, you might be in Africa, you might be in Eastern Europe, you might be in Latin America, right? It ends up being those places, and it really is places that follow the stablecoin, right? So the stablecoin has already taken a very strong hold, and the question now is so now what do you do after that, right? And it's very simple. The stablecoin today allows you to hold value in the dollar, right? And the next step is how do you earn against the dollar, right? And make sure that you can do something and earn money while you're just simply holding the stablecoin. And so if you look at that today, that audience today has started off with the safest type of thing, right? Because you're going up from 100% safety and zero yield to now with the T-bill the way it is, it's gone to sort of, 5, it's like 4.2 or whatever, but still infinite safety, right? Size and risk very, very low, right? And what we're doing now is continually going up the yield curve and up the risk curve over time. So you see us now going from T-bills to a little bit of CLOs. You've got some private credit. And you go from 5% APY to 6, 7, and now we're in kind of the 8, 9 range, right? And
is that what the Apollo kind of deal was about?
That's right, exactly. The Apollo deal. So for those, Apollo is one of the largest private equity firms in the world. One of our investors, they just deployed a $50 million fund on Plume, backed by Grove, working with us as well. And so it's the largest deployment of Apollo in a private credit fund on any chain to date. And what we're doing with that is very simple. Now the user can permissionlessly and in a permissioned way, depending on what you want to do, get access to this private credit fund. It's a very high quality fund. It earns about 9.5% APY, right? And so now you can do this on chain with a few clicks, right? You can now take that. What we're doing in phase 2 is embedding this into places like Morpho Vaults and our Morpho Pool. So now you can lend against this and loop on this asset, right? I think it's a little bit tight, and it's most people talk about looping in this use case as a way to extend leverage. It's extra leverage on the APY, right? And so that's kind of like what we're doing with these things today. Now, where we're going with this is pretty simple. If the audience remains the same, we're going to just continue moving down that road until we find an equilibrium from a sort of risk and a yield perspective, right? Now, as that audience changes, then the types of things we want might change. And so you can see things like, equities becoming a thing, private shares becoming a thing. People are widening the appetite for what they want to do here, but it's still very yield focused. It's still very savings focused, right? For now, and it's still very risk free, right? For now, we're beginning to cross a little bit of the riskier area to try and achieve some higher APYs.
So for the moment, basically, I feel like you're describing an audience that feels very different from your typical crypto degen who's chasing 20% API. You're talking about a relatively risk-averse audience, but one that does not presently have access. Like, why would they buy a T-bill on Plume? Does that imply that they do not have access to U.S. Treasuries in their normal investment environments?
I think it's a great question. Like, why would you buy this? 'Cause actually, most things, you're right. When you tokenize most things, they actually become much worse, right? Because now you're taking on smart contract risk, right? You are taking an asset that usually, let's take, say, is 5%. Now you're going to lose some points in the middle because middlemen are going to take it. So that's why you're going from let's call it 4.2 to now 4.0, maybe 3.8. So the product becomes worse in almost every sense. Right? And so it has to be a compelling reason as to why someone would do this on chain. One is certainly access, right? If you are in an emerging market or you don't have access to the dollar in a safe and stable way, it is just much easier in many cases, like UI-wise, UX-wise, to just go to a web app, push a button, and get access to this thing, right? And so that's largely. But the second thing is now being able to use it as collateral elsewhere, being able to mix it with other things. I think the actual use case is more around that's going to merge. Today, it is a store of value, right, on chain. That's what people are doing, and we want to evolve it into something that can be utilized across there and combined with other vaults, with other products to create higher APY things, or act as a liquidity buffer for other assets.
So one of the other announcements that you made a couple of weeks ago was with EY, and it's to use EY's the technology we developed called Nightfall, which is a privacy technology. The testnet is now live. We're working together for a mainnet in probably January, February timeframe. Why do your investors need privacy? What are they caring about? What are they trying to get?
For sure. I mean, look, it's the benefit of having a single global network for everything is that you can do all these things you couldn't do before with this global marketplace, right? You can have a permissionless composability, you can have people building on top, all these great things. The problem is, if you start to do things with size, right, and you start to do things with an emerging user base on here, which is the institutional folks, right? They can't just have every transaction open in the world for everyone to see, right? And it would be not just like a bad idea, and it would not just be like scary for them, it'd be actually just like risky for the business, And so it's inhibiting a lot of growth and a lot of demand and a lot of usage without this kind of privacy layer, and be able to think about privacy and have a more contained environment. So you can still transact and build in an open way, but do it with the sort of peace of mind that you're not just leaking your information to the whole world the whole time, right? And so we're really excited, and I think it's been a long time in the works, and Paul's been a great friend of Plume for a long time, and so it's been, we've learned a lot from them, and watching kind of what's happening, we're excited to build this together and get the product out in the next couple months. But yeah, Paul, I mean, curious, like, where are you working on? Talk maybe zooming out a bit. Talk about Nightfall, about privacy. What you guys see from this, and also just the excitement that you guys are hearing around. Like, I think people were very excited to see it in the streets, and so yeah, talk about that a bit.
Yeah, so privacy has been a thing. It's kind of amazing. Like, the Ethereum Foundation's talking about privacy now, and everyone's starting to talk about privacy. We've actually been working on Nightfall and privacy technology for the last 8 years. I like to when I'm feeling a little embattled at the office, I like to joke that we are 8 years into a project I thought was going to take like 2 years at the most. Because ZK privacy is really, really hard, but I believe it's worth it. And if you followed the news yesterday, for example, you noticed there was this massive exploit of trusted execution environments, right? These kinds of hardware-based trust environments are not trustworthy. And we have invested for the last 8 years in true mathematics-based, public domain, open source privacy tech, which is what we are deploying here. Now, what I think is really important is we need to shift our mindset from one of mixers and privacy pools, where you put an asset into a privacy pool and then you take it out to cash it out, to a model where you put assets into a privacy pool and you transact inside the privacy pool. And so what we're working on is a couple of things. First of all, a system that's really designed for full sets of transactions, so transfers, payments, swaps. And then additionally, we have a companion tool to Nightfall called Starlight, which can run in your layer 2 environment. It's fully programmable, and you can start to build fully functional DeFi applications that run under privacy and have composability with other assets under privacy. So you can start to not just buy the asset, but also do things like put it into a lending protocol or liquidity protocol and retain control. And this is something you just can't do today with other privacy protocols. You can't make them programmable, with a couple of rare exceptions. This will help create this whole ecosystem around programmable, privacy-enabled investment assets.
And we've been talking about, like you said, we've been talking about privacy forever, right? What do you think has changed that's sort of like bringing this to light now and pulling this forward?
It's really kind of three things. Number one, the regulatory environment for sure, especially the Genius Act was a big deal, but really the key was that unlocked this was in December, the U.S. courts ruled that you cannot sanction a software developer for for developing privacy technology. Secondly, in January, the U.S. Treasury removed all the sanctions from Tornado Cash. Now, we don't do anything that's remotely like Tornado Cash, but removing the sanctions from Tornado Cash really was a signal to investors and institutional users that privacy itself is nothing wrong with that, and that like unleashed kind of the whole ecosystem. So it's super exciting. Plume was the very first network that's building on Nightfall. Yesterday, we announced Cello, which is a emerging markets enterprise B2B payments focused network, which I'm very excited about as well. The goal is that you will be able to do all of your critical business transactions under privacy in the Ethereum ecosystem using tools like Nightfall.
Amazing. And that's why, I mean, I think it's a huge deal because without doing this, we're not going to onboard institutions in a major way, right? And so today, the retail market is, what, $4 trillion, right? And we're going to bring a lot more of that on. But we know that the lion's share of money, right, coming in, and capital coming in, users coming in, is on the institutional side. And without these things, we just can't get going. And so I think we were really excited to work with EY, right, to build on this and bring this to light. So some of the institutions working with Plume, so we have, Galaxy is a big investor in us. They've put over $50 million. We have Apollo with over $50 million. We have a bunch of other nonsense coming up and partnerships. None of this is possible without working with you guys, right? And I think they're not going to be comfortable in transacting and building, right? And again, not just like you said, not just transacting and using, but actually building new DeFi applications to actually bring new use cases to light. That can't happen without Nightfall and the stuff that we're doing together here. So I think it's incredibly bullish.
Yeah, I'm very excited about it. Now, one thing that's everybody asks when we start talking about privacy, and it's also relevant as all these people come on chain, is KYC and AML. And I know that you guys have made a big investment in this space. So talk about a little bit about sort of the overall approach that you're taking to KYC and AML, because even though stablecoins are bearer assets, the regulators are still being very clear that you do have to know who your customers are.
Yeah, exactly. I mean, look, KYC is it's a dirty word in crypto for the most part, and same with AML, right? And I actually never thought I'd have to care about these things or talk about this so much. But the reality is it's important because, again, if we want to unlock more capital and grow the ecosystem, we have to care about this stuff, right? So for us, it's very simple, right? I think we've always thought mostly about the end user, right? And what the end user experience is, because I think that ultimately is what drives change and drives behavior, right? You need actually to make it very simple to actually use these things. Otherwise, it's not going to work and no one's going to use these things. And so when we think about it that way, KYC is the opposite of a good user experience for 99% of transactions. So you just can't do anything with it. And you see this, I mean, it's not even hard to see. It's like those, when you follow a click path of somebody, you can see the minute there's a KYC, the drop-off rate is like 99%, right? And so you can also see, if you look at two types of things today in crypto, if you look at a permissioned asset, take the BUIDL fund, right? Which is a great product, right, from our friends at Securitize and Blackstone, BlackRock, excuse me. It's got $2 billion in TVL on it, which is great, right? But if you look at the holder count, it's 90, right? And we know in crypto, right, you can have as many wallets as you want, right? So, that 90 holders is probably right? And so that's the reality of these things when it's permissioned. Now you can have bigger dollars, but very, very little actual usage, right? On the other side, when you look at a more permissionless expression of the T-bill, so take maybe USDS, right, which is MakerDAO's product, which is, again, it's mostly tokenized T-bills they're holding. That has, I think it's like, $7 or $8 billion, so even more TVL, right? And hundreds of thousands of holders and users, right? And so when you make things open, you tend to have far more usage and far higher velocity of money and capital flowing in, but it's a different profile, so you need both. And that's what Plume is built to do, right? We embed things like AML, right? Things are sort of, non-starters for most things into the chain, into the network. And so every transaction you're doing, it's processing this thing automatically, and you're constantly checking the source of funds. So we can be sure that when you're deploying and building on Plume, there's never any compromise from that perspective. You're not going to have to worry about compliance being in your ass and making sure that, you're doing wrong things. So there's that. But on the other side is having built a lot of KYC tools and infrastructure to make it easy to implement it in a progressive way whenever you do need. When you do need to, we collect this information and are going to use ZK and other products out there to put this information on the network, so you can only have to do it once and only so many times. So there's two ways to do anything on Plume. One is the more permissioned way. It's the direct way using KYC. The other is the permissionless way. Nest today is our protocol for doing this. We take real-world assets, we bundle them into Nest, which is our permissionless protocol, distributes the yield that way, and through that we've gotten to the largest holder base in all of crypto when it comes to RWAs. But still, we appreciate, respect both sides, and I think they need to work hand in hand to grow the ecosystem.
Chris, I think we're out of time. So thank you very much. It was great talking with you, and look forward to working with you as we go forward.
Thank you. Appreciate it. Thanks, everyone.